When you work with trading partners all across the world, things can get a little tricky, especially when it comes to Ohio soybeans. Different countries want different things from Ohio soybean farmers as far as the quality, the way they use them, and exactly how they get those soybeans from point A to point B. Well, our guest on today's podcast is going to be talking about her efforts in making sure that those countries, no matter where they are across the globe, are getting what they need from Ohio soybean farmers and making sure that those soybeans grown right here in the Buckeye State are put to use all around the world. That's coming up after this here on the Ohio Farm Bureau podcast.
At Ag Credit, we've been proudly providing support and financing for agriculture in rural Ohio for generations. As a local farmer-owned cooperative, we value our members and work to supply the best service possible while offering competitive products and solutions. Solutions that support the next generation getting started, ones that help operations grow, and others to aid with transitions. To apply online or find the location nearest you, visit us at agcredit.net. Ag Credit, committed to agriculture, committed to you.
As the nation's #1 insurer of farms and farm families, Nationwide has long been a reliable resource for rural America. And while the current surge of data, technology, and globalization promises incredible growth potential, each new opportunity is shadowed by rising threats like security breaches, GMO contamination, and supply chain failures. This business is about adapting. It demands a protector just as forward-minded. It demands Nationwide.
Ohio soybeans are a significant export to South Korea, particularly for food grade and non-GMO varieties used in products like tofu, soy milk, and soy sauce. Ohio soybean farmers and the Ohio Soybean Council actively engaging with Korean buyers to promote and strengthen trade relationships with that country. Those efforts are led by our podcast guest this week. Maddie Corby is Manager of Demand and Market Development with the Ohio Soybean Council. Maddie, welcome back. Good to see you.
Thanks for having me again.
So I know that you have had jet lag a couple of times this year now, as we've talked about your travels across the globe. The latest venture being to South Korea. What were some of the highlights of that recent trip for you and the Ohio Soybean Council?
So we traveled over there last week, we being myself and then one of our new farmer board members, Carl Kruger from North Central Ohio, actually very close, very north, close to the lake. So he is a non-GMO grower as well as a chicken farmer up in that area. What's special about his operation is that he is fully non-GMO. So he was perfect to talk with our customers that we were interacting with over in South Korea. Again, just we were over there to really share the message of U.S. soy, Ohio soy, and the care and value that farmers take into that market and to growing those products.
How heavily does Korea rely on soybean imports from Ohio, but the U.S. as a whole?
So numbers from the U.S. as a whole, we hold about a 51% whole bean market share. Entire soy complex, we're about a 20%. But what's very unique about that 51% is those are going to be those whole beans used for, or some of them are going to be those quality whole beans used for the soy food market, which is a major staple in a lot of Korean household diets.
I mentioned some of the uses that Korea will have for soybeans grown here in Ohio, but what's important to them as far as the soybeans they're going to get from the Buckeye State?
The quality is there. The protein content is there. If you're using tofu in your everyday diet, you're going to need something to add a little bit more protein, a little bit more supplement to your diet if you're not consuming your traditional meats that might have standard higher protein. So Ohio is a large contributor to that protein market. And we were able to kind of talk about that during the events that we had. But on top of that, we were able to talk about sustainability of U.S. soy, of Ohio soybeans. Something I forgot to mention, one of the things that we actually interacted with was we called it the U.S. Soy Campaign House. This was a large marketing house or building along one of the major roads in South Korea in Seoul, their major city. And it invited consumers, it invited general audience to come in and learn about U.S. soy through various interactive elements, and then to talk to farmers and hear and interview with farmers. So that's how Carl was able to get in front and message the importance of the protein that you get from Ohio and U.S. soy, as well as the sustainability efforts.
Course, it's about building relationships, right? You went over there to talk about what we're doing here in Ohio. They come over here and see firsthand how we grow the highest quality soybeans in the country. Sometimes, though, building that relationship to another level takes some creativity and thinking outside of the box. What are some of the ways that you do that with Korean customers in particular?
Mm-hmm. So the campaign house that I mentioned, that's unique. That is something that the U.S. Soybean Export Council hasn't done before. That is a very unique experience for customers in country in Korea to learn and get hands-on experience and really learn about U.S. soy. When they come to the U.S., the Korean groups that we host in Ohio, we get them involved not just on farms. We let them go see container exporters in the state. We've also interacted with the Ohio State University with their food industry department over on the College of Food and Ag's campus. And then we've shown them kind of the mess halls, the food halls on campus, just to see how the U.S. incorporates soy into diets, and then how our typical everyday diet works for young kids or young students.
You mentioned just how big of a market share that U.S. soybeans have in that part of the world, Korea in particular. But what are some of the prospects for growth in that country? And how do you see partnerships with other Asian countries evolving in years to come? There's a lot of potential in that part of the world.
Mm-hmm. And I keep saying the word sustainability. I mean, it's a hot word, I mean, in the US, just with typical practices. But when consumers are buying in Korea and when they're shopping in grocery stores, they're looking for a sustainable product. That's what they're cooking in households. So USEC has developed a US soy sustainability logo that is being adopted by numerous companies in Korea to show that they are sourcing the highest quality, most sustainable products for what they're selling to their end customers. So we actually got to meet with two companies while we were there, both soy milk manufacturers who are adopting the U.S. soy logo, sustainability logo this year. So the sustainability effort is something that is growing and something that we as U.S. soybean growers can market to this area because it is such high demand. And so we are not only doing that in Korea, we're doing it all across Asia. And we are doing the marketing in terms of the sustainability push, but also the quality that you're getting from the U.S. and from Ohio beans. And I think that's going to be really what pushes us in the future.
Maddie Corby is manager of demand and market development with the Ohio Soybean Council. Her trips around the globe making a big impact for Ohio soybean farmers, but even here at home, as we speak, she's on a farm with a trade delegation on a mission trip to see what Ohio soybeans are all about. So making a big splash for soybean farmers on the other side of the world, but also right here in the Buckeye State. Maddie, thank you so much.
Appreciate it, Ty. Thank you.
Sometimes out here, you have to speak loudly.
Our voice alone may not have as much impact as we would like, but my voice
can be heard and influential through membership in Ohio Farm Bureau.
My voice, along with tens of thousands of Ohioans,
makes a difference when it comes to legislation, regulation, or litigation that can be positive or potentially harmful to those of us in the agriculture community.
Become a member today at ohiofarmbureau.org.
Because there is strength and members.
Welcome back to the Ohio Farm Bureau podcast. Cattle prices have set records on multiple occasions already this year, and even with these record high prices, margins for cattle farmers are razor thin thanks to continued elevated supply costs. Plus, add to that skyrocketing cattle prices, many producers also taking into account a closer look at risk management. Let's talk about that aspect of the cattle markets now with Jeff Harding. He is the general manager of the risk management group with United Producers. Jeff, great to see you. Welcome to the podcast.
Hey, thank you, Ty. Thanks for taking time to listen to me today.
No problem at all. I appreciate the insights. Can you give us really just a general overview of what's driving the current strength in live cattle prices these days?
In my opinion, there's two things that have really become kind of focal points for me, at least. One of them is obviously we have reduced the cow herd in this country significantly over the last 2 to 3 years. Well over 1 million cows less than we had. The beef on dairy have replaced some of those because we're harvesting more beef on dairy heifers than we were Holstein heifers. So we have more numbers there, but it's still a smaller number. The other piece of the puzzle here that I really believe has gone on is we have significantly improved the demand for our product. With National Cattlemen's Association's efforts, Farm Bureau's efforts, also on the pork side, United Pork Producers, all those organizations have done an excellent job of advertising what our product is. Our product's safe, high protein, and by the way, it tastes great. So I think the demand has been significantly improved. We have a conference call with our employees every Tuesday, and I've been telling them for, I don't know, 3 or 4 months, heads up, be aware, be careful, because we're going to hit a wall here with consumers because this price is getting too high. It hasn't happened. They continue to buy the product, and I think that has made a huge difference in where the price of the live cattle can go.
Back on the farm side, you work in the world of risk. So, what are some of the main financial risks producers face when prices are as high as they are?
Yeah, and that, we typically think, most people outside of the industry think, live cattle are 235, 240. These guys are making all kinds of money, but that's not the case, obviously. And there's two big items that typically go along with feeding livestock, and that number one is the price of the feeder animal. We've got most of the live cattle that are being fed in this country are being fed by individuals that buy feeder cattle in the first place. And we do have obviously cow-calf operations, but some of them are feeding cattle, but most of them are selling those calves. And as far as a high percentage of them are selling those calves. And the feeder calf prices have just skyrocketed. We now have individuals buying feeder cattle at $2,000 a head plus. So that suddenly puts huge pressure on, where are these cattle going to be? What are these cattle going to be worth when they're ready on the other end? And that's really where we come in as far as risk management is concerned, trying to manage this volatility. And that's the other risk that our producers have. It's so much different than it was. As you can tell, I've been in business a while by looking at me, but the volatility is so much faster, and it's so much larger increments that suddenly within a week or two, we can be looking at huge differences in the value of those cattle standing in that man's barn. And that's a huge risk. Right now, in the recent month or two, we have seen the value of live cattle change almost $25 per hundredweight. On a fed animal, that's pushing $300 a head difference in value. That's the kind of volatility we're talking about. Recently, it's been going up, so that's been a positive thing, but we all know, most of us will admit, some of us won't, but most of us we're concerned about protecting our individuals.
What are some of the common mistakes that you see producers make when prices are as strong as they are?
I think the real number one issue, and it's not just when prices are high, it's a kind of a human nature thing, is producers tend to try to outguess the market, and they try to wait until they hit the high. And often we miss the boat. Now again, the last 12 months, that strategy probably was a positive thing, not doing anything. But that's really the biggest mistake I see, is producers are waiting on this marketplace and they don't put risk management in place. And when we say that, we say risk management, we don't have to lock a number in. We can put a floor under the cattle or under the hogs that would allow them to have advantage of an upside. But if it fell off the cliff, we've got a protection under us. And that's really, I think, the biggest mistake I see.
I mentioned that aside from the high prices, we're seeing high prices for everything that goes into feeding cattle. Of course, costs of feed and the drought from last year, export demand, so many factors in these market conditions. How does all that affect risk for cattle producers?
It significantly affects risk by fluctuating the price of their product and by fluctuating the price to produce the product. and up or down. Sometimes it's good, sometimes it's not. But our direction, or our theory with risk management is, let's know what our costs are. Let's know what those numbers are that it's costing me to produce that animal, and let's know what an acceptable profit level is for my operation. And that can change based on the specific operations. Younger people can stand more risk or not stand as much risk as older people often. So we look at each operation and say, what can you stand? Okay, what is the level of profitability that you can live with long term, and your operation will still be here? And define those numbers. And when the marketplace gives us those numbers, pull the trigger. That's the hard part. Because often when the market's going up, we get to those targets, and we can put what we call target prices in and have them there. And if they get to that level, they automatically fill. But we'll often have target prices in, and the market starts climbing. Producer will call and say, hey, we're getting close to the target. Let's raise the target. Sometimes that works, sometimes it doesn't. But staying the course, staying disciplined with, if I get to this profit level on a consistent basis, I'm going to be around as an operator, is really what we're trying to convince people they need to do. So we got some individuals that are very, very good at that. We still got individuals that are controlled by the emotion in the marketplace. When I say emotion, I'm talking about all the noise, all the predictors, all the, the neighbor says it's going to go up $10. This guy says it's not going to go up $10. And suddenly we've got emotional involvement in this deal, and it suddenly becomes not a disciplined approach. That's what we're trying to help manage. And when I say that, I don't mean if we have to do it on every hoof, but let's do it on part of them. Let's have some protection in place so we don't have a disaster. And so, you're not going into your banker and saying, I'm in trouble. Those are the kind of things we're trying to help manage.
One way to take that emotion out is to utilize some new tools, some new technology, some new ways of getting those numbers where you need to be. What do those look like in today's cattle world?
Well, some of the tools that we would offer with UPI is a simple hedge, which is the most common tool. It's the most economical tool. And with a simple hedge, we go onto the Board of Trade and we sell a contract for live cattle or feeder cattle. And it pretty much locks a number in. So if the market does go up, we're not going to get an advantage from that. And if the market goes down, we're not going to get burnt by that. So, we don't want to use that tool unless we're absolutely sure we like the number and we're absolutely sure we've got a profit level that we're going to like in the end. That's the most economical. We also utilize put options, put and call combinations, which will give a producer a floor price, and I'll also allow for the upside. It won't be all the upside because we've got to pay for this put, and they're not extremely cheap, but we can have a floor in place. The day we buy that put, we have a floor. So if the market goes down, we know we're protected. We can buy various levels of those puts, and we can cheapen up the cost of them by buying a lower price put, which a lot we have, then they're at risk for whatever margin is there. And that cheapens up the cost of that. We're also using a lot of packer contracts especially on the Holstein side, because those packer contracts define the basis. And on Holsteins, the basis is pretty significant. If we go to the open market with a Holstein, we can have a $15, $20 variable there as far as what the basis is. So these packer contracts define what that basis is going to be in the front end. And then we can price it accordingly. We also offer LRP insurance. That's the livestock risk protection insurance coverage. That is a government program similar to crop insurance. It's also subsidized by the government to reduce the cost of that product. That product will cost similar to a put, but probably $1 to $2 less than a put for hundredweight. The other piece of the puzzle with the LRP that's positive is it's based on a per head scenario, not 40,000 pound contracts or 20,000 pound contracts. So we can do 5 head, we can do 5,000 head. Makes it very flexible for smaller producers that don't have a semi-load. I did want to mention on the simple head side and put option side, UPI, the co-op, is carrying the margin calls on behalf of the producers up to $150,000 per head. So that is a pretty significant thing that producers are able to take advantage of. You know, if we do this through a broker, an individual broker, they will be calling for margin calls. But the co-op has decided to cover that on behalf of our members. And I really think that helps the mentality when we're using those products, because if we start to have margin calls, we suddenly hesitate to cover or protect the next group because of margin call pressure. This allows the producer to not be concerned about that, you know, up to a pretty significant level.
You really have your pulse on the cattle markets day in and day out. And given where prices are now, what scenarios are you watching that could trigger a market shift one way or another?
Well, I think the big concern that I have personally, and I mentioned earlier, is if we get to a point where the product is just outpricing itself from the marketplace. Again, we haven't seen that happen. But that could be something that we're going to experience if we keep pushing this number higher. I'm not describing a scenario or thinking of a scenario where people just stop buying beef, but I think that they could buy more pork, they could buy more chicken and back away from the beef and maybe lessen the demand, but it hasn't happened. So again, I've been talking about this for 2 months and it just hasn't happened. So that's a good thing. I'm glad I'm wrong, but that I am concerned about that. There's a list of things that can happen just in the world that affect our marketplace daily. I call them outside factors. Tariffs is a good example. When the president came out announcing he was going to place tariffs, our markets did drag for a week or so. Wars affect demand, affect traders' mentalities in the stock market, which affect their mentality on car commodities. Those kinds of things. You know, if you have a good example in the past was COVID. We had packing plants closed, and suddenly we had nowhere to go with cattle for a while, and the price dropped significantly. So there's all those outside factors that drive this marketplace, that change this market daily. That are very, very unpredictable because you just don't see them coming. So that is why we are a mentality right now of trying to create a scenario where we're managing. We know what our costs are, and we know what our profit level needs to be, and be prepared to pull the trigger, be disciplined to pull the trigger. We have seen. Just a couple weeks ago, when we heard that the Chinese and the U.S. discussions or talks around tariffs were not going well, we saw the market drop almost $6 to $8 over a 2-day period. Those are the kinds of things that we can't see coming, and that's pretty scary when it starts to amount to big time dollars on a man's livestock standing in his barn.
With all that said, Jeff, before I let you go, one piece of advice you'd give producers looking to protect profits while remaining competitive.
I probably have already said it, but I know I've said it, but it's still a big deal in my mind is don't try to outguess the market. Don't take that mentality. Don't try to hit the highs. Again, the last year or so, that direction it worked, but I've watched several years when it didn't, and saw people kind of in trouble because they waited for a higher number. So take the emotions out of the marketplace if you can, at least on part of your production, and let's cover some of it. Let's get some floors in place. Let's get some protection in place, and not allow this market to steal, the profit from you.
Jeff Harding is General Manager of the Risk Management Group with United Producers, our guest on the podcast. Appreciate all the insights. I know there's a lot going on in your world of agriculture, and really great to get all of our members on the same page. Thank you so much.
Thank you. I appreciate it.
Find previous podcasts at ohiofarmbureau.org and search podcast.